What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broad market. We've got our core list of companies that we're always watching, and this week I've got 7 additional trade ideas to share with you towards the end of the video, so definitely stay tuned for that. Don't forget that the market will be closed on Monday in observance of President's Day. I would still expect high volatility this upcoming week, but not necessarily lower volume just because it's a shortened trading week. As always, don't forget that anything we are associated with is linked down below in the description, and without further ado, let's jump right into these charts. Off on the SPY weekly time frame, looking at candle structure and location as we always do. We once again have an inverted hammer here, simply indicating that the sellers really stepped up at these highs, took it to the open, through the open for a relatively weak close down at the lows of this week's trading session. So to me, the bears take the win from a structural perspective. From a location standpoint, they're also going to have the upper hand. If we think about what the prior 2 weeks had done, we had a trading range, equal highs, equal lows. This week, we have a lower high and a lower low breaking down out of that 2-week range. So it's starting to initiate a new move to the downside. I would say coming off of this lower high, so from here to here, correct, we would expect at least an equal low to kind of this area, roughly 420. We'll talk about it on the daily in just a moment, but the bears seem to have the upper hand here. From a pattern perspective, remember that we did start to at least acknowledge the possibility of a head and shoulders here happening on the weekly in last week's video. That could be coming into play over the course of this upcoming week, right? So the neckline is roughly 428, 425. We'll see that on the daily again. Don't worry, we'll cover it. But based on that, right, the weekly chart could be fairly bearish. The next major area of support here is coming from roughly, if I just hover the cursor in here, 404, 400 is a gap fill on the weekly time frame. I'm not saying that we have to get there this upcoming week, but at least start to think about some of the bear case scenarios here from the larger time frames, okay? So that's what I've got for you. It would look like the sellers have the upper hand once again. Things don't really change or shift back to the bulls court from the weekly perspective until we can accept back within this prior trading range from right around in here, the chunk from November to roughly January of 2022, all right? So let's drill down now to the daily time frame chart and just start talking about actionable levels into this upcoming week. Again, I would point out that last week's, I want to echo the sentiment of the Wednesday video, was incredibly choppy. This is still the all-important pivot here, at least in the short term at least, around 443.50. As long as we're below that, we're going to lean a little bit more bearish, and if we start to get above it, I would stay neutral and only get more bullish if we can take out that double top now, up around 457.50, okay? I know it seems like it's so far away, and sure, there will be day trades to be had if the move is higher in the first place, but I wouldn't be overly convicted to the bull side until we can take out that area. It is the area of double top, upper wicks on the weekly that we just saw, right? So to me, that's the critical break area to the upside. Does it look likely? Not as of right now, simply noting that we are underneath that pivot, 443.50. We have a breakdown day underneath the low of Monday on Friday with some acceptance there. Notice the uptick in volume. To me, it would make sense that we rotate into these lows around 428.50. If I briefly show you what's going on in the futures here, we are getting lower price acceptance on the open of the Sunday night session. Do keep in mind that futures will be open on Monday, but the volume should be relatively light. We would basically treat it like an overnight session. So we'll see. We'll have to readjust based on what happens for the Tuesday open. But as of right now, it does look like the bears are getting some price acceptance lower, okay? So back on down to the daily. This is the first target into the upcoming week, 428.50s. Underneath that, it's the Monday low, the panic Monday low, around 420.85. That's ultimately going to be the equivalent of the neckline break of the weekly head and shoulders pattern, because even if this breaks in here, that will still potentially be support. It could produce a bounce. So I would really start looking for the weekly play out to the downside only if that area breaks down here. Again, that's 420.85 cents, all right? So those are the downside targets into the earlier part of the week. You'll notice that if I scrunch the chart up, remember, there's a lot of chop. There's a lot of price acceptance in here. 416 could be the next magnet, just based on some prior support here and here, which led to these rallies. It's also an area of high volume. If we were to build out like a volume profile chart of this area, you would notice that's kind of the high volume node, 415, 416. That's if we take out the panic Monday lows. I know we've been harping on the downside here, but things do seem a little bit more bearish than bullish out there as of right now. But again, expect high volatility. We could easily see just as choppy of a week as what we saw this past week with a day down, a day up, a day down, a day up. Be prepared for that, especially with the shortened trading week, as people aren't really necessarily committed to long-term positions just yet. All right. So that's what we've got to the downside. Here's another bear case scenario, or building the bear case scenario. If I take out the Fibonacci's, this time coming from the true low, the panic low from that Monday, we did close underneath the 61.8 on Friday. So that's a bit of a bearish indication. If I remove that and come from the higher low that we've been using in the past couple of videos, clearly we're underneath that 61.8 as well. Reminder that once again, we did take out that Monday low, which was kind of hovering around that 437 area where there was potential for a higher low, because that's where the breakout really stemmed from right around in here. It didn't hold, right? So that's why we've been harping on the bear case. I know I've already said that, but a couple of more things pointing in that direction. If it's going to be a move to the upside, remember that the first critical recapture is 443.50. After that, a break of the resistance trend line, maybe it's playable into the top of the 4-day balance from in here. Remember that area right there, that's 451.85 roughly, and then the double top, one step at a time to the upside. I certainly would not overstay your welcome in a relatively choppy and indecisive market here, with the slight upper hand to the bears at this point in time. Let's continue along and talk about the QQQ. Just as bearish, if not more bearish, kind of closing right on those equal lows, whereas the S&P didn't quite make it all the way there. In this one, the target would be the Monday panic lows. Okay, so that's going to be 334 quarter. Underneath that, what do we have for next up supports? We're going to start to target some of these gap fill areas, roughly 324, excuse me, and then these equal lows from in here, 315, 316-ish area are next up for support in your QQQ. So that's the bear case scenario. Again, it does look like they have the upper hand, falling underneath that pivot 2 days lower, taking out that Monday low. Obviously, if I were to draw in the Fibonacci's from the true low of the Monday up to the high, we are underneath the 61.8 from that perspective. And even if I come from this one to the high as well, clearly underneath that 61.8 as well. So nothing to really be said for the bullish camp as of right now. I would only be bullish in your QQQ, the NASDAQ 100, on a recapture of that bottom end of balance right here. That's 353. We've talked about that level. If it does happen, your target could be here, but just like in the S&P 500s, please don't overstay your welcome in a relatively choppy market as of right now, especially one that is leaning slightly further towards the bear side. And that target, just by the way, in case you can't see the numbers, is 362 even on the upside. So that's what we've got in our two biggest broad market indexes. Let's go down to the IWM, the Russell 2000, and our small caps, still signaling risk off with the big rejection, double top here. And on the weekly, it would just be a large upper wick, right? Around 208, which actually, let's just go up to it and see that on the weekly. You can see this was our trading range. We've talked about this time and time again. Two upper wicks now resisting off of it, two inverted hammers, looking for the rotation for the equal low on the break, retest, failure. There's your H pattern, potentially lower after that if we get some follow through to the downside. Volume, I would imagine, would have to pick up a little bit if we are going to see that sort of more protracted move to the downside in small caps. Let's go ahead and go back down to the daily and talk about some levels and again why this is bearish. If you look at this as the breakout level, notice that it never held, excuse me, once, twice, back down underneath. You could start to get involved underneath this 197 area for the rotation for the equal low here, closer to 191.70. That's sort of a bearish play if you're willing to do it. To the upside, I would not be bullish on the IWM until we can firmly recapture that 208 as we saw from the weekly time frame. That's that balance range low, or potentially the more conservative trader is waiting for a break of the resistance trend line coming from that all-time high here in the IWM. It's just not looking bullish. It's as simple as that. Fairly choppy as of right now, but there are some bearish indications with a slight uptick in bearish volume on the Friday session as well. So for right now, the entire broader marketplace is very indecisive. I want to be clear about that, but we do have a couple of data points pointing to the bears having the upper hand here. So that's going to wrap up the broad market. Let's get into these companies. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every time a new video comes out. Kicking off our companies here with Apple, what you'll notice is just like everything else we've discussed so far, lower high, equal lows already in place here. We're looking for the breakdown to the equivalent of that big pivot zone in the SPY and the QQQ, which in Apple is going to be 164 quarter. That's the line in the sand. If we break down underneath that, there is much more room to fall down into 157, the equal lows, basically the panic Monday low. I'm not not saying all the way there, probably 157 first, but there's some room to fall in Apple if we take out 164 quarter. As of right now, there's still potential that this could turn into a double bottom. We would need to see a move to the upside almost immediately on the Tuesday session in Apple if this is going to save itself off of this area of support. Notice that we've tested it now once, twice. There was a breakdown of it, also resistance, very nuanced, but in that upper wick of the red candle. We've tested it once again. We're testing it another time off of a lower high. It doesn't really bode well for this area holding too much longer. Also, very nuanced, but a slight uptick in volume as well as we were selling on the Friday session. So if we break down underneath 167, that's your trigger for shorts in Apple, at least to the 164 quarter. If that breaks, that really opens the door up into that 157. If it's going to be bullish in Apple, I would maybe play the move up and over 171 for at least the 2-day highs. This is scalp territory, right? This is not a swing trade. That's nothing of the sorts, but that would also be the neckline. If this is going to be a double bottom here, that's the neckline. The target would be here. So up and over, what is that number? That's roughly 173 to get into the neckline of the old, which is no longer really the prettiest pattern, inverted head and shoulders, right? That breakout point here around 177 is still in effect. We're just far away from it, right? So that's the bull and bear case, but we are certainly leaning to the bear side here inside of Apple into the upcoming week. Let's move along and talk about Netflix. Zooming in on this one, it's a fairly ugly chart. It's really far down below with, of course, that earnings gap down. So let me adjust it to make it easier on our eyes. We have this trading range in place. It's starting to build a flush point with now, what is this, 4 touches, 1, 2, 3, 4, basically to this low around 387.30. If that breaks, looking for a quick move into 376, 377-ish area. There was a nuanced level in there. And if that breaks, it's down to the lows of the earnings conundrum at 352.67. So not looking high here inside of Netflix, especially with the inverted hammer on the Friday session, really failing to recapture that area 396.70. Remember that this was a smaller range. It looked something like this. We already had the look below and fail once. Was it going to be the look below and fail twice? On Friday, there was potential if we could close back inside, but that clearly did not happen, and we had a failed back test of that 396, 397-ish area. So leaning more bearish here in Netflix, of course, just like the broad market and Apple so far in terms of our individual companies. If it does want to turn around, the only bullish trade in Netflix is up and over the top of that prior balance 412 to get us into these 4 data points. So 1, 2, 3, 4 perfect touches there around 427. All right. Tesla is up next. This one again is going to start leaning a little bit more bearish just based on what's going on with the price action. We had this trading range. We discussed it for quite some time. We had the look below and fail, back down underneath, but more importantly, this time around, underneath the support trend line. Okay, so we do have equal lows coming off of a lower high. You know the drill. We are looking for the equal low here and the breakdown because we have the lower high and the failure to at least get to the top end of the balance on that look below and fail. So more weak than strong here inside of Tesla. The low is roughly 800 to be paying attention to. And if we get follow through underneath that, we have, what is that, 764 that's coming from this area, prior breakout, which then held as support in here. And then the next level of support underneath that is 726. Now, I'm not saying, again, that Tesla has to get there this upcoming week, but those are the structural elements that I would start to pay attention to. The only bullish trade in Tesla now is, can we break out up and over 943? A lot of work has to be done if that's going to be coming back into play, something like this, and then maybe a break into 1,000. I don't know, maybe, but again, there's no reason to be bullish unless we can take out that 943, and as of right now, not really seeing it here inside of Tesla. Continuing along and talking about Alibaba, this one has earnings. Is it this week or is it next? The 24th, so certainly this week. Be on the lookout for that. There's a gap overhead. That's really the only thing to be playing for here in Alibaba. Other than that, we're in chop zone, right? I've removed some of the levels. They just weren't holding up as great as I would have liked to see them. Chop zone back and forth. To keep it really simple, in Alibaba, it's either longs up and over 130 or shorts down and out underneath 115, 116 to get us into this big flush point on the daily at 110. And if that breaks, that certainly opens up the door for lower into roughly 100 here. So Alibaba, more of a patience play, day trades only. I would definitely be looking for this gap potentially as something to trade around, right, and use for risk-reward purposes, but I wouldn't necessarily look for it to fill one way or another. If we move into it, fine. You know where your target is. It's the gap fill. Stop goes underneath. You get the gist, right? And those numbers, by the way, are 121 starts filling the gap up towards 124.11, all right? That's what we've got in Alibaba, but as of right now, chop, patience play, be cautious, wait for the move, either up and over here or down and out underneath here. here. Next up, we have Facebook. This one continuing to exhibit bearish activity. If I just zoom in a little bit and then manually adjust this one here, because it's fairly ugly, just like that Netflix chart. If we do something like this, you can clearly see we are still underneath the resistance trend line coming from here, touch 1, touch 2, kind of 3 there on the Thursday session. Nonetheless, another low was produced, and it's just not looking fantastic, right? To me, this was the big tell, the fact that we looked like maybe we were going to recapture that on the Wednesday session, then the fact that we resist there for an equal high on Thursday and roll over underneath the Wednesday low, that was the nail in the coffin, right? We were kind of looking for that to produce maybe a double bottom with these hammer candles, indecision doji candles, getting us to the neckline here. It never happened, right? So because of that, lean a little bit more bearish here inside of Facebook. Breaks of this 207.24, which yes, I do understand we have closed underneath, but if we can do something like this, equal low off the resistance trend line, notice there's a lot of room, right? There's a lot of room to fall until about 174.05. Let me go out to a weekly time frame chart just to illustrate where this is coming from so you can kind of understand the void of price action we're dealing with. If I go to a 5-year chart, you can start to get the sense if I zoom in on this section right here, incredibly poor structure on the way up from the weekly and incredibly poor structure on the way down from the weekly. We, of course, all know what that was, correct? So to me, there's some room until we get to that prior structure in here, 174. So, roughly a 30-ish point move to the downside inside of Facebook. I don't know. It could be potentially there over this upcoming week or into next week. Again, there's just no structure pretty much underneath us in Facebook at this point in time, and we've exhibited some fairly bearish tendencies with that failed backtest again. Let me just illustrate that one more time of that 216.35. So Facebook leaning more bearish than bullish, as has been this entire video here. Let's continue along and talk about NVIDIA. Even after earnings, getting a little bit of a beating here and flushing that 240 point. You know that was critical support. We've been monitoring that for quite some time in here. We broke it on Friday. We did not, though, fill the gap from underneath us, and we also supported right around that 200 SMA. Because we're underneath it, though, I would start to count this as day one of the breakdown and look for a little bit more follow-through into these lows around here. Again, this is that same theory that we're looking for the equal low after a lower high from here to here. It doesn't look like there's strength inside of NVIDIA. So to me, equal lows around 220, 219.50, the daily support trend line, start to become the more attractive thing to be watching out for. The only bullish trade as of right now is a break of the daily resistance trend line and 50 SMA at this point in time. Just noting that, again, you had the attempt here, looked good off of the higher low, but earnings just sort of put a nail in that coffin, and now we're lower. So everything is sort of exhibiting more bearish than bullish price action out there, and I would start to be more patient for these follow-through moves until we can start to get above, more major resistance instead of like simpler levels, like a couple of days highs or the prior day's high, something like that. I would wait for larger breaks of larger levels to start to get a little bit more follow-through, potentially, because the market conditions certainly aren't supporting it right now. But that's what I would start to watch out for and lead more towards instead of looking for more nuanced breakouts, okay? So that's what we've got on NVIDIA, looking for lower. We talked about downside. We talked about upside. If it does break this area of resistance, it's all about here, right? The flush point around 272.25. After that, we'll take it one step at a time. No real sense in talking about upside targets as of right now. Continuing along here, getting off that mini rant and talking about Microsoft, certainly more bearish than bullish. We know we're breaking down underneath the area here off of the H pattern, the failed backtest of 300. We're at this area of support. It'd be great to see a little bit of a dead cat bounce, then a flush to take us into those panic lows from the prior Monday. We know the deal, right? And that's roughly going to be 275 inside of Microsoft. So just looking for downside trend continuation, but a little bit of price digestion considering that this one has already been on day 2 of the breakdown. Notice that Thursday was day 1, taking out that critical area of support. Friday, day 2, getting us into this area here. So maybe a little bit of digestion and then the follow through there. If it's going to be bullish in Microsoft, it's got to be up and over 300 for a move into the resistance trend line one step at a time. Doesn't really look like that wants to be the scenario early on this upcoming week. Amazon, last but not least, the beast here. Zooming in a little bit. This one is the obvious one. To me, it's all about the gap fill underneath us. So can we get some consolidation above and break down into it? Beautiful trade in my estimation, looking for that gap, this void essentially in price action to fill underneath 3014 into 2885. Lots of meat on the bone in that type of trade. Your stop loss could go a number of places. You could be a little bit more conservative and say, I'm going to place it just above the 3-day flush point. You could be, tighter with the stop loss and say, okay, if it fails to accept into the gap and pops back out, I'm out of the trade. You could do it a number of ways, but this gap is certainly worth trading for here inside of Amazon and will probably have my attention, during the course of the week as something to be paying paying attention to. In terms of being bullish in Amazon, it's patience, right? We know that this area is important from the weekly time frame around 3176, so it's got to at least be a recapture of that, if not this high from in here at, 3255, okay? So Amazon, it's got a long way to go before it's being bullish. Remember that this is fairly choppy in here. Day trade, it was a great day trade, right, underneath the 3-day lows, but ultimately speaking, this is an area of chop in here. I would be patient and watch for the gap to fill, or wait for longs until we can start to clear the top side of this box to do something like that. If you're a really aggressive bull in Amazon, I wouldn't call you insane if you started to say, I think that the gap's actually going to hold. Maybe it's a long here, looking for the rotation to the top with a tight stop loss just underneath in case we do start getting acceptance into the gap. So there's a number of ways to be playing this one. I personally am leaning towards the bear side, noting that we have highs, lower highs. We have this glaring gap underneath us. To me, it makes sense we go lower. But again, there's multiple ways to skin a cat in the marketplace. And this is just a number of those ways, I suppose, on Amazon. So that's going to wrap up our companies. Let's get into these trade ideas. Quick reminder to hit the thumbs up button, hit the bell button, hit the subscribe button, all the buttons YouTube tells us to tell you guys about, and let's get right into these trade ideas. First one is going to be a repeat on Lucid, just because the setup is still in play. We have a flush point of a daily bear flag, bear pennant, happening around 26. If it breaks, 22 is the target coming from prior support here on the daily time frame chart. So this one is just more of a reminder that Lucid is still in play, flush underneath 26. Next up, we have SQ. This is a new one to the list, of course, and earnings are around the corner on this one, so do be aware. Notice the intensity of the daily downtrend, and if I just adjust so we can see the more recent price action a little bit more clearly, if I do something like this, we had an area of balance. We have day one of the breakdown happening on Friday, looking for follow through into that next target around roughly 84 quarter, 85 if you like nice round numbers. I would look for this to unfold before earnings and be out of any swing trades as earnings are unfolding. Could it crash the stock all the way, let's just say something outlandish like $50? Sure, it could happen, but I don't think the risk is worth it. It could easily make it up here towards the top end of the balance as well on a really well-received earnings report, right? So earnings, always sort of a 50-50 shot. And again, this is sort of a mini rant, I suppose, with theta as well as implied volatility working against you. Wouldn't really be my first decision to hold a swing trade through earnings, especially with options, okay? So that's the mini rant. We talked about the setup here, day one of the breakdown, looking for lower here. If it is going to be a look below and fail, we know the target's the top end of the range here, around 121, we'll call it for round number's sake. So again, whenever you see an area of balance, just a tight area of consolidation, there's always going to be opportunity. Could be in either direction, follow through to the downside, look below and fail. A number of things can happen, right? You can even get something that looks like this, break and retest, re-short at 102, right? So a number of opportunities in SQ. The setup does look good here for lower though. If we move on over to Morgan Stanley, MS, for the next trade idea. Oops, we want the zoom tool here. Oops, I missed twice. Apologies for that. This time, third time's the charm. There we go. So big hammer candle happening off of a known area of support. You can see that this area has produced nice bounces in the past. Maybe it will happen again. No guarantees here, but if we can take out the high of Friday's candle, notice that the scene of the crime could be a valid target here. It's also $100, the psychological number. So to me, it makes sense. If we can take out the high of Friday, if this hammer candle does produce a bounce, that would be the first target. Then monitor for a little bit of continuation. If you look at this area as just a big channel, right, something like this, the top end of the channel is pretty much, $5 higher, 105, 106. I'm not saying it has to be in play, especially fighting the broader trend of the marketplace, which is lower right now, but it does look good for at least some sort of bounce to the upside here inside of Morgan Stanley. Next up, we have Dash for DoorDash. Zooming in on this one, big flush point in play, almost more like the Lucid setup we just checked out. It hasn't broken down yet. Big failed move higher on earnings, fading back down to this big area of support, 95 or 94 quarter rather. If it takes it out, where's the next daily support underneath us? Let's actually go out to a weekly to see what we can find here. We have nothing, right? We're basically moving into new all-time lows here in DoorDash. Monitor for continuation. $1.50, probably on something that's still roughly 100. Look for the $5 marks, the $250 marks, those psychological elements that people may be attracted to inside of the stock and in terms of placing orders, okay? So definitely a bearish setup here inside of DoorDash. Let's go back down to the daily and continue on with X for United States Steel. And zooming in on this one, I promise I'll get the tool right the first time. There we go. You'll notice that we're at a resistance trend line after a 100% retracement of the move, just about. It's not quite 100%, just a little bit shy. You get the gist though. If we can produce a higher low and reattempt that resistance trend line, I would monitor for breakouts, quite frankly, noting that United States Steel, it's not a tech company, certainly. It's more of an industrial, it's more of a building material, right? And those are really seeing the pressures of inflation and moving higher. So steel could be a trade to the long side. Obviously, gold, one of the metals, the more expensive metals, obviously, is breaking out to the upside. I'm not saying steel has to follow suit, but the setup would look good off of a higher low to the resistance trend line in short proximity of time. Also noting that it's not part of the tech sector, right? So if you're a contrarian, take the opposite trade as me, right? Say, you're looking for shorts here at the resistance trend line for a rollover with a stop loss just above. A number of ways to sort of look at this setup, but nonetheless at an inflection point here inside of X. Next up, we have Walmart, and consumer staples have been doing really well over the past week as well, right? Relative strength there in that sector. Walmart, nice consolidation bar after a large breakout post earnings. So can this get follow through to the upside is ultimately the question. If we can take out the 2-day highs, roughly around 139.50, then there's potential to run into this pivot high, right? Around 141, right? So that's the upside case here off of a sort of, this would probably be a smaller time frame, maybe a 30-minute bull flag or something like that. There's your breakout to the upside. So far, healthy consolidation. I would really want to see it hold up above Friday's low, noting if I do something like that, let me remove that level in between there as well. So anything above 137 roughly does look like healthy consolidation for follow through to the upside. If it takes it out, notice that if I scrunch this chart up, then maybe it'll ultimately be the start of a longer move to the downside, noting that this support wouldn't really be holding at that point, right? So we've already broken it once, we recaptured it. So as of right now, looking at this as a bull flag, but if we come back down, not looking so promising that this 135, 136-ish level will continue to hold here inside of Walmart. So in the short term, bullish pattern, but in the longer term, if this rolls back over, maybe it's actually not that bullish underneath, these recent lows from the earnings cycle. So to keep it simple, just to sort of wrap it up, I suppose, here in Walmart, longs up and over the 2-day highs, 139.50 into 141.62. Patience underneath, maybe a short is produced underneath 134. Next and lastly, we have TTD for the trade desk, and this is starting to produce potentially an inverted head and shoulders, right? So something that could look like this, if we can hold this area here as a higher set of lows, your neckline is roughly right here. That's the most attractive part about it, the fact that it was prior support, then turned to resistance here as well. If we can clear 85, what's the target? You can clearly see the two highs from right around in here. 98.21 would be your target inside of TTD. And also just remembering that we generally look for a measured move the size of the head to the neckline. It's much smaller than that. So this could easily be well within the range of something TTD could do on a sort of panning out of that pattern there. So those are the trade ideas I've had for you. And also, by the way, in TTD, you want to see it hold up above the shoulder mark here, which is 76. Okay, that's where we had a little bit of earnings panic down underneath. Nonetheless, recaptured the area. We're consolidating inside. So 76 must hold support here inside of TTD. If it's underneath, probably just off your radar, getting chop through this area of indecision down below. Okay, that's truly going to wrap it up this time around. If you enjoyed today's video or learned anything new, definitely let me know down below in the comments section or by giving the video a thumbs up. Quick reminder as well that Monday the market will be closed. And with all of that being said, I wish you a green trading week.